Welcome to Trading Lounge and the SP 500 for the 11th of July. I'm in Sydney, so that's why it's the 11th, but it's the end of your session in the US. So it looks like we're looking at our bullish count here. So we're looking at wave 3 with an A and a B and a C for wave 4, and then up for 1 here and back for 2, tucked in here, and then we'll be looking for wave 3 here. So with wave 3 here, I'm just using wave 1 as a bit of a guide stick there. We would need to see wave 3 roughly this length, probably longer, but when we look at the Nasdaq has already been pushing out here on like a this third wave here. So this is where the Nasdaq is in this, where our trend for this has just started here. Mind you, this is a 6-hour chart and that was an hourly chart for the Nasdaq. So, but the Nasdaq is really leading out with all of this. So bit of a puppet on a string, dog on a tail and all that. So we're just following really the Nasdaq higher. So we'll need to keep an eye on the Nasdaq. And yeah, we should be looking at a 5-wave sequence between these wave 2 and 3 here. The main stepping stone that we have here obviously is that we're looking at this high here. So we always gravitate to the closest largest number, and that's 3,200 here. So at the 3,200 here, we'll be looking for a trade setup here. I've probably emanated this a little bit large here, but we'll be looking for a classic trading levels pattern sitting in here. So we'll see it either like this, if this is the 3,200 across here, we'll see the arrival, the reaction, the first high above the level, and then we'll see something like this. Now it can pull down below the level here, or it may not, but it doesn't matter. We'll have, this is our reference point here, the first high above the level, and normally this would finish within group 2. So if this is 3,200 here, then the next levels up are 10, 20 and 30 here. So this first high above the level would be coming in at 32.30. Well, roughly it could be 20 as well, but group 1, the 10, the 20 and the 30, wherever they may be here, they're like resistance levels here, and they help bring the market back. If we get support on top of group 1, which is the 32.30 in this case, then we'll just continue higher at that particular stage. The variation on this is where it doesn't come down below the level here, and it looks like this here. But at the same token, we've got this high reference, and we can also look at our second high here to move in as well. But it's just good to be aware of this here, because this is where folks lose money in here and get chopped up in this particular space. So we just need to be mindful, and even if it's not like this, it'll be something like this, you know. And once you become aware of it, then it just makes life less stressful, because you can just like watch it unfold. I mean, normally we have patience, but if you've got knowledge and patience and you're watching something unfold in front of you and you know where you are within the pattern, then it just makes life much easier, and then you can start thinking about how to make more money out of the situation, you know. So yeah, look, if this market's going to fail at the 3,200, then, I mean, going to fail, what's going to fail at the 3,200? It's not going to find support on the 3,200. So there could be a variation on this. We'll come back to this in more detail, but I just want to have a look at the variation on this. So the variation on this is this here, and you may remember this, but I was calling this a wave 4 in here. It's a bit of a long shot, but it was just the way that things counted out, and I went through the tick chart, and it ended up just being 1 and 2 and 3 and 4 here. So this is where the 3,200 will come into play here. We need to be mindful of that. So we could, this 5-wave structure between wave 4 and wave 5 here, we could look at, we've got wave 1 here and 2 here, and then we'll take, say, wave 3 close to the 3,200 here. Then we'll have wave 4 and wave 5. So this will give us half of the classic trading levels pattern here in this case. So we'll have the arrival, the reaction in 3 waves. I'm probably doing it a bit large here, but whatever, and then 5 waves up here for the first high above the level, and coming into over here we talked about 3200, then we've got 10, 20 and 30 in here. They're all group 1, they'll slow that down a bit, and then we'll have something like this here. But the main point is that we'll have that high and we'll have that high here, and the market may go up there or it may come back down from this point. But either way, we can be safe here. And then the same thing applies to the bottom end here as well. So just while we're here, if we get 5 waves in the first move here, then we'll know we'll get 5 waves here. But as I mentioned, it could just go straight up from that point. So you don't want to go short. You want to go short on the third one down. So 1, 2, 3. So the second low here, then we can go low under that one there. And if it retests that and fails that, then we're on that side of it. So it's best not, you need to think like a robot. You can't be emotional about this. As I mentioned yesterday, the markets are not emotional. They are as a whole, and that's why the Elliott works, because of the human nature of decision making within all of this. But yeah, you need to be the detached observer. You need to be able to see the natural flow of destiny unfolding in front of your eyes, and you pick and choose when you play in the drama and what the consequences are for that. And understanding patterns is one way of doing it. There's many roads to Rome, and we all learn and we all take in things differently. This is just my way of doing it, and it's not perfect. There's probably many better people out there that are not on the internet, that are just doing what they're doing. So yeah, and that's another whole story within itself. But anyway, getting back to the 3200, I'm just pointing out, this is the weakness area in here. This is where it could fail, and this is where it can take off to the next level up here. That's all we're trying to do. We're trying to get from one number of the same degree to the next number of the same degree, and then we go back in, and so on and so on. Unless we know where we are within a bigger picture, we could just hold through something like this. And in this case, at this number here, we could probably do that. But normally, the corrections that occur the correction that's occurred here, normally would get a bigger one at the number 3 here for this. So we just need to be mindful of that. Now I want to go back to our bullish count now that we've talked about the bearish count. So yeah, so wave 1 here with an A and a B and a C wave here, and then we'll need to look at this as wave 1 and this pull back a bit further than expected, but there you go. Wave 1 and 2 here, and then we're going up for this little third wave here. So we'll have 1, 2, 3, 4 and 5 here to make wave 1 here. So if I can just bring this over here, I'll have to readjust the stuff on the smaller chart here, but it'll be something like that if we're going to be moving up here further. So yeah, this is it here. You may even have a few other trades in here, because on the tick chart we talked about subgroup 2 area in here. So let's just cruise in here for a moment. So I've got this labeled a bit differently here. So in a nutshell, this really should be up here as wave 1 and 2 over here, and this will be wave 1 here and 2 here and so on. So I'll need to readjust these, what we're looking at here. I haven't really put a lot of work into this count here just yet. I just wanted to get the video out this morning, or morning my time. So so this is the tick chart here, which is let me bring in a bit of data here. A week should do the trick. So yeah, so this wave 1 will go up to here and so on, but it doesn't really matter at this particular stage. I had started to count it, but yeah, it doesn't really matter that much. As I mentioned yesterday, we talked about being long in group 2 here, and I think it's just worth talking about a little bit here. So if we can just have a little bit of a look at group 2 here. So let's just get rid of the midpoint, and let's just open this up a little bit. So just want to talk about a few things here because, when we talked about getting in, if what I normally say, I don't remember what I said, but I know what I would have said if I'd said anything, and I know that I said something. So 65, 72 here and 80 here, they all make up group 2, in this case subgroup 2. So because the next level up is the minor level, so it's minor level here, so 100, 200, and 300 are minor levels, and these are sub levels. And yes, we can go down into micro levels as well, not a problem. So, but what I want to talk about here is really just getting in here. So in this case here, it was a little bit rough to start here. The market came up and hit the 65, but it took all this time over here to actually sit here and actually move up from this particular point here. Now, if I was traders, I may have had a losing trade in here because I probably would have gone long in here, but at the same time, I would have been out here for this. I would have gotten back in over here with the stop underneath, and then the same up here as well. I would have been long first high, second high, or even third high here. I would have been long here again. And the same sort of process over here again. But they're all a little bit different. This one's wild, and this one's a bit more settled, and this one's quite sharp. But the thing is that you can see how the market comes up in its own way and tries to find support in these markets. It comes back, and in each case here, it's tested here. There's actually between 65, 72 and 80, I call it group 2, and this is just the skeleton of it. There's a lot of other numbers in here that are really important once you start understanding the levels more important. Obviously 70 is important here, and the even number in here, 68, is important. And then from 70, you've got micro group 1, which is 1, 2 and 3 in here, and then you've got 5 in here, and then you've got 8 in here as well. So the 78 in here before you get to the 8. So there's actually a lot in this little group here, so it's just important. The market's traveled really powerfully quite through this, and will continue to to move up to here while the Nasdaq moves up to 11,000, and they'll both have a bit of a correction at that particular point. I just wanted to show this is just a stock here, and there's I've been looking, we started the US stocks a few months ago, whatever, and through that time I've gotten to understand things a little bit better, and as you know now, I'm going to start looking at stocks in the in the Geno, the bio, 3D printing, and so on. But this is a really common kind of move up from the March lows in stocks here. You'll see this a lot. And I'm seeing it a lot, but I just wanted to point it out because they do create where the the indices end up as such. So, and this is a stock that hasn't moved up too much. It's at a medium level here, 65. So in terms of the trading levels here, we can put that on a medium level there, and then the major levels here. But not to worry about that too much. What I wanted to talk about here is just the pattern up here. So if you can count with me, that's great. So we're looking at wave 1 here and back for wave 2. That's pretty fair. And then we've got wave 1. So from wave 1 and 2 here, we'll be looking up for the third wave, which I think is here. So in this case, third wave, there'll be 5 waves in that. So we've got 1 and 2 here. And then we've got 1 and 2 and 3 and 4 and 5 here for the third wave, the fourth wave, and then 1 and 2 and 3 and 4 and 5 for the fifth wave. So coming back here, we've got 1 and 2 and 3 and 4 and 5 here for the third wave, and then the A, the B, and the C here for the fourth wave. Now, in this particular instance here, this fourth wave here, this pull back below this one here, yeah, the A wave here. So it's a nice A, B, C here in this case. In the SP 500, it came up to about here. And then in the Nasdaq, it was more like a running correction up here for this. But, I think this is a nice sort of shape that we can take on board here for this. So yeah, so 1 and 2 here, and 3 here, and 4 here, and then going up for wave 5. Now, wave 5, I'll need to do a little bit of work on. This is what we'll work on. We could have this just here as wave 1 here, so wave 1 and 2 to come in here. We're going to have an extended third wave here, so 1 and 2, well, even further up here, I'd imagine, so 1 and 2 and 3 and 4 and 5 to finish. But I just wanted to point out we're in the sort of, whichever way we look at it, and it may just be that the 5 waves are already kind of completed in here. I'm just using this stock as an example, just wanting to get it could just be something like this here, and we've got our 5th wave in here. And across the 65 here, of course, this would be the arrival, the reaction, the first high above the level, then the ABC correction, and then we'll go up again. But I think this is a good case for many of the stocks in the market from the March low here, and we'll be looking at those in the equity section very shortly. But I just thought, you know, the stocks create the indices, and they're the constituents within the indices, and yeah, and that's their patterns at the moment. So I just thought that I think it's just good to know that. Okay, getting back here for this, well, let's just come back to the 15-minute chart here for a moment. So you may have trades in here at the moment, you may not. Whichever way it is, what we're actually looking for here, if we can look at this again here, is that we just need to know what to do with our bit of pocket money in this market. So if it's going to be bullish, this is what we're going to be looking at here for this. It's going to go up there further. So we're going to this is just recapping the situation, okay? So we're looking at wave 3, wave 4, and wave 5 coming up into group 1 here. So group 1 will be 10, 20, and 30. They need to be set there properly. And then we'll be looking for an A and a B and a C that can come back into group 2, normally finds the support there. So it will be something like this here, okay? So your decision of what you need to do, you know, in all of this, if you're holding long positions, depending on what sort of contracts you're holding. I mean, futures contracts don't hold any overnight financing, where a lot of people trade CFDs in the Euro section and the Asian section of the world. So they'll be paying overnight financing, and the overnight financing is you know, calculated every day at a higher price. So it's actually compound interest. So you really need to be mindful of that. And a lot of CFD providers don't display that for you and show it in a cumulative sense. And it does add up, you know, and they just clip your ticket, you know, out of your balance. So you need to be mindful of that. But yeah, if this count is correct, we do not want to miss this wave structure here. So if you take profit in this space up here, then, you know, take a nice chunk of it, say 50 to 70% or something, and then having some skin in the game, you know, keeps you connected and attached to the situation. And what I also want to talk about here is that if I'm wrong about this pulling back as wave 2 here, then what we need to do is we look for support on top of group 1 here. So if we put this on group 1 here, sorry to waffle on, but I just think the details are everything. And then in this case, we look for this classic trading levels pattern sitting on top of the 30 here. Now on the 30 here, what we normally see is a move up here. It can come back here, then move up here, and then it normally can come back to the 2 here. Now sometimes, maybe about sort of, I don't know, 30% of the time or something, it can basically come down to 1.5 here and then move up from there. But whatever happens, you need to be long above those highs here at that point, because if we get support on this level here, the number 3 here, then it's telling you that the market is being severed, is detaching itself from this number psychologically in the order flow of things, and people will naturally think of the next level up here. So that will be 5, the 32.50. So getting support on the 30, like a tested support, it's telling you that we're not going to be pulled back to this number again here. Now in this group 1 here, if this here becomes if the number 2 here, the 20, becomes the retested resistance, then you know that the market's going to be pulled back down to this number. And if it's going to be pulled back down to this number, well, it can go further from that point. Yes, there'll be a bounce here and support and so on, but once that number 2 becomes the resistance, then it opens the door for being down. So just be mindful of that there. So we do want to take a percentage in this space here. You'll need to work that out for yourself. And then our aim is to, just generally speaking, copy that, is to get back in over here for this. And we can get in 2 or 3 times over here. We want to have at least 4 positions in here, if not, a dozen. I mean, I scale in a lot in very small positions, and I manage each one and try and get each one to break even. It's anyway, it's another story. But anyway, that's the picture. Thanks for tuning in. Much appreciated. Cheers.